Great day, everyone, and welcome to our virtual class in BAMM6304 or Business Research. Today is week 12 of our trimester, and we are nearing the end of first trimester. So we only have 2 more weeks before you submit your final documentation of your feasibility study. For this session, I will be presenting and demonstrating how to analyze short financial statements. So for the past few weeks, we have been doing the income statement, the balance sheet, and the cash flow statement. So all of those are from our accounting equation analysis table. So for this demonstration, I will be using the AEQ. Kasi nandito ang balance sheet, nandito ang income statement, at ang cash flow statement. Okay, so let's make a review. Bago tayo mag-establish, merong 500 na capital. So, ibig sabihin, capital yan. Contribution ng mga owners. So, positive. Papasok ang pera. Okay? Pagkatapos, nagkaroon tayo ng low. So, positive din yan dahil nag-increase yung ating cash. Pero gumastos tayo, expense ng 80,000. So, dapat palabas ang cash, negative. Nag-purchase tayo ng machines and equipment, furniture and fixture, tsaka ICT. So, negative. So, ang ating asset, hindi gumalaw, ibig sabihin pareho lang siya, nagbago lang ng form. So, yung ating 160,000 na ibayad natin sa machines and equipment. So, nabawasan ng cash, nadagdagan ang asset, yung machine and equipment. Ganun din naman, negative natin, nabawas dahil bumili tayo ng furniture and fixture. Equals negative of negative of 50,000. Yan. Ganun din naman sa ICT, computers, CCTV, lahat ng technology equals negative 50,000. Yan. Of course, nagbayad tayo ng business marketing, branding, tsaka rent deposit. So, lahat yan. Wait, pati ito, palabas ang pera natin, nababawasan yung ating cash. Nag-rent deposit tayo, so nabawasan din ng 60,000 yung cash, pero still an asset because deposit siya. May babalik naman sa atin. Nagpa-renovate tayo, 50,000. Tapos nag-purchase tayo ng initial inventory. So nag-purchase tayo, at other pre-operating expense na 10,000. Yun. So, ang ating accounting equation, assets always equals the liabilities and owner's equity. Plus yung owner's equity na dadagdagan ng sales, less cost of sale, less expenses, less withdrawal. Okay. So, punta naman tayo sa ating sales and cost of sale. So dito, ito ang i-consider natin. Yung ating revenue from sales, ito yung sales amount natin, hindi lahat cash. Meron tayong accounts receivable. Meron kumukuha sa atin na binibigyan natin sila ng 30 days para magbayad. So revenue from sales, 1 month equivalent for AR. Ibig sabihin, ang natanggap lang natin, so magkakano ngayon yung ito ay kinita natin sa isang taon divided by 12. So ibig sabihin, ang accounts receivable natin ay equivalent to 1 month. Ibig sabihin, ang atin na lang nakuha ay 5 million minus So 416. So kung ito total mo ito, 5 million. So equal ang ating revenue. Ngayon, ano ba ang cost of sale? Yung ating nabenta, merong cost of sale. Saan manggagaling yung cost? Eh dito sa inventory. Asan ba yung inventory natin? So, yung cost natin galing sa inventory, galing sa materials, galing sa ating mga ano man yan, ingredients, basta raw materials, inventory natin yan, pareho lang siya. Okay? So, ang nagastos natin doon sa ating 5,000 ay 5 million ay 3 million. Siyempre, cost of sale, inventory. Of course, sir, 200,000 lang ang inventory natin. Okay lang yan. Kasi nag-purchase naman tayo ng inventory. Sabi nito, purchase of inventory, hindi lahat binayaran naman natin. Meron tayong huling buwan na babayaran natin next month. Magkakano yung purchase of inventory? Hindi ibig sabihin kung magkakano yung ito cost, di ba? So yung ating na-purchase na inventory ay magkakano? So since yung inventory natin ay 3 million, which is equivalent to kung ano ba yung inventory na nagamit, yung isang buwan dyan ay babayaran natin sa susunod na buwan. So, di-divide natin to into 12. Yun ang ating accounts payable. Therefore, ang ating binayaran lang ay minus yan. So, 2,750 ang ating nagastos at itong ating liability ay nadagdagan ng 250. So, 275 plus 250 is 3 million. So, yan. Tapos dito, lahat ng operating expense. Magbilang natin salaries, yan. SSS, pareho lang yan. Provident, PhilHealth, rent, utilities, advertising, communications, business permit, wala pa dahil dun sa ating startup, sa ating founding, meron na tayo. So others, what about depreciation? So bumili tayo ng machine and equipment, furniture and fixtures, ICT. Machine and equipment, sabihin natin 5 years. 5 years na rin ito. Ito, sabihin natin 2 years. Therefore, ang depreciation nito was divided by 5. Yan. Ito namang furniture and fixture. Five years then, divided by 5. Ang ICT, good for 2 years. Divided by 2. Yan. So 32,000 ang ating machines and equipment na nabayad kasi depreciation. And then, loan payment. Loan payment natin, so far, balanse. Ang loan payment natin sa natin makikita, doon sa ating loan amortization table. Sum of magkano yung binayad natin. Hindi itong ating premium, yung payment due ng unang taon. Enter. So, gumastos tayo ng 365. Pero yun ay napunta sa ating principal, ibig sabihin mababawas sa loan, at saka yung isa, loan payment ng interest expense. So, dito tayo sa liabilities sa loan. So, yung ating 1 million, mababawasan niya ng magkakano? Equals yung nasa principal. Itong nabawas sa principal. At ang expense ay yung interest. Itong interest sa year 1. So, balance pa rin. Kasi what we did to the left, we also did to the right. Okay? So, base dito, meron kayong loss na 15,000. In that case, bukasan natin ito. Gawin natin ito. Yan, para 484 ang kita. Still balance. Okay. So, kumpleto na yung ating year 1, pre-ops, saka year 1. Gagawin natin, paano natin i-analyze itong balance sheet, itong income statement, itong cash flow. Punta na tayo sa financial ratios. Ano ba ang financial ratios? Sabi dito, financial ratios are created with the use of numerical values taken from the financial statements to gain meaningful information about a company. So, kaya ang financial ratios, kumusta ba ang kumpanya? So, the numbers found on the company's financial statements, ano-ano nga ba yun? Balance sheet, income statement, and cash flow are used to perform quantitative analysis and assess a company's liquidity, leverage, growth, margins, profitability, rates of return, valuation, and many more. So marami yan. So una nating pag-aaralan ay ang liquidity ratio. Ano ba ang liquidity ratios? So ang liquidity ratios are, of course, financial ratios that measure a company's ability to repay both short and long-term obligation. So meron tayong mga utang, liquidity. So kunyari, magsarado tayo ngayon. Mababayaran ba natin yung ating mga payables, yung ating mga obligasyon? So yun ang unahin natin. Sabi dito, current ratio. Ano ba ang current ratio? Measures a company's ability to pay off short-term liabilities with current assets. Ang sinasabi ditong current assets ay cash, inventory, accounts receivable. Yan ang current. Bakit current? Kasi yan ang liquid. Yan ay ito, cash, liquid na yan. Cash na siya. Inventory, kapag nabenta yan, cash na rin yan. Yung accounts receivable, magiging liquid na rin yan kapag nasingil na natin ang ating mga creditors. So, current assets. So, current assets, sum of cash, inventory, and AR equals sum of, punta ulit tayo sa AEQ, or you can refer to your balance sheet. Dito, cash plus accounts receivable plus inventory. So, ang total ng ating current assets ay 1.6 million. Magkakano ba ang current liability? Pag sinabing current, short term, ito yung pwedeng bayaran natin after a month. Okay? Ang current liability natin ngayon ay Ito, accounts payable. Saan galing yan? And remember, bumili tayo ng ating mga inventory na every month bumibili tayo, plus babayaran natin yan sa succeeding month. So after 12 months, yung 12 month babayaran natin sa susunod na buwan. So yan yung 280. So magkakano ngayon ang current ratio? So equals, ito lang yan, divided by current liability, 7.81. So what? Bakit may 7.81? Ito ang mahalaga. Paano ba natin i-interpret ang current ratio na 7.81? Sabihin lang nito, tingnan natin. Current assets divide sa current liabilities. Ibig sabihin nito, for every 1 peso na ating short-term accounts payable, short-term liability, kaya nating bayaran 7.81 times. Sa bawat 1 peso ng utang, meron tayong 7 pesos and 81 centavos na pambayad. Ibig sabihin, doon sa ating mga creditors, huwag kayong kumbaga, matakot. Magsarado man tayo ngayon, kayang bayaran ng ating current assets, ang ating pagkakautang. Yun ang mahalaga. Next is cash ratio. So the cash ratio measures a company's ability to pay off short-term liabilities with cash and cash equivalents. So, saan ba ako? Yan. Sabi nito, current assets minus inventory. Huwag natin isama yung inventory. So, equals, ito yung current assets natin. Minus, magkano ba yung inventory natin? 100,000. Ang ating current liability, ito pa rin. Saan galing yan? Siyempre, dito sa ating current liability na accounts payable. Again, divide lang natin siya. Divided by 208, 6.85. Ano na naman ang ibig sabihin nito? Magsarado man tayo ngayon, meron man inventory dyan na hindi pa na i-convert sa cash, we can still pay our current liabilities by 6.685%. Ano yung sabihin? For every peso, meron tayong 6.85 pesos na pangbayad. Okay? Ito naman, o sabihin natin, cash. Cash lang ang pag-usapan natin. Huwag yung mga receivable. Baka hindi natin makolekta yan. Huwag yung inventory. Baka hindi natin mabenta. Let's talk about cash only. What is our cash ratio? So, ang cash ratio naman measures the company's ability to pay off short-term liabilities with cash and cash equivalents. Okay? So, magkano ba ang ating cash? O, balik tayo dito sa ating AEQ table. Ito ang ating cash. Ang ating current liabilities ay yan, divided by our current liabilities. Anong ibig sabihin naman ito? Huwag pa rin matakot ang ating mga creditors. Magsarado man tayo ngayon, meron tayong cash. 4.85 times our liability, current liability. So we have, for every peso, meron kaming 485 pesos. So 100% of that, meron tayong 485% na pangbayad. So ito ang, ibig sabihin ito, very liquid ang company natin. Magsarado man ngayon, kaya nating bayaran yung ating mga current liabilities. So, operating cash flow. So, operating cash flow, ito naman, cash flow na dito yan sa cash flow. Kasi ang cash flow, merong inflow from investment, yung from capitalization, inflow from financing, tsaka inflow from operations. So, kasama rito, inflow, yung mga cost o yung sales natin at yung ating mga expenses. So, expenses na wala ang maliban sa depreciation, yung mga non-cash, operating cash flow. So, saan makikita to? So, itong cash na ito, lahat yan, hindi kasama ang depreciation because depreciation is non-cash. Okay. Equals sum of lahat ng ito, cash, hanggang dito sa, so magkakano yun? Pareho lang. Current liabilities, so parehong ating operating cash flow sa cash ratio. Yun. Okay. So hindi naman lahat to kailangan nyo gawin. Tingnan nyo lang yung pinaka magandang ratio. For me, ang pinakamagandang ratio dito yung cash ratio. Kasi liquidity ito, di ba? Ibig sabihin, gaano kabilis ma-liquidate yung cash kung magsarado na tayo. So we have 4.85 we have 485% na pambayad sa ating current liabilities. Let us proceed to leverage financial ratios. Leverage financial ratios naman measure the amount of capital that comes from debt. In other words, leverage financial ratios are used to evaluate a company's debt level. Una, debt ratio. Measure natin ang relative amount of a company's assets that are provided from debt. Total liabilities, total assets. So, pagsama-samahin kasi yan eh. So, yung nakabili tayo ng mga assets, bakit? Meron tayong loan. So, ilang percent yun? Magkano ba ang total liabilities? Balik tayo sa iikip mo. Total liabilities, this, plus, ito. We have 894. Magkano ang total assets natin? Total assets ay ito, lahat cash, AR. These are our total assets. So, ilang percent no asset natin ang galing sa liability sa ating loans, etc. Okay. Liabilities over total assets, ibig sabihin, yung kabuuan ng ating assets, 48% dyan galing sa ating loan. So yung umiikot na pera, na ipambili natin lahat ng assets natin ito. Ayan, cash, AR, accounts receivable, inventory, merchandise, machine and equipment, lahat yan ay galing sa ating kapital at saka sa loan. So ilan dyan yung loan? Ang capital, considering the capital. So ito lang, loan. Sabihin, 48% ng ating assets ay galing sa loan. Right? Debt to equity ratio calculates the weight of total debt and financial liabilities against shareholders' equity. Okay. So, magkano ba ang total liabilities? Magkano ba ang equity? So, ang total liabilities, again, meron tayong kopya rito, magkano ang equity. So, balik tayo rito. Remember, ang equity natin ay composed of capital, less drawing, plus sales, minus cost of sale, minus expenses. So, ibig sabihin, nagkaroon tayo ng net income na 484. Idadagdag natin yan sa beginning capital, ibig sabihin, forwarded natin for the year 2 ay ang capital na niya ay 984,000. Okay. Equity ay okay. Sabihin, magkano yung total liabilities natin divided by equity. Ibig sabihin, yung ating total liability in relation to equity, yung ating kinita ay galing hindi sa ating sariling pera, pero doon sa ating inutang na finance. Total liability. Okay. So, dalawa na yan. Interest coverage ratio. Ano naman ito? It shows how easy a company can pay its interest expenses. Interest expense saan? Doon sa niloan. So operating income takes a company's gross income, which is equivalent to total revenue minus cost of goods sold, and subtracts all operating expenses. So operating income, gross income, minus cost of goods sold, minus operating expense, ito lang yan. Ito. 5 million minus 2.5 minus 2 million, 484. Yan ang ating operating income. Magkakano naman yung interest expense? E di ito, diba yan yung interest expense, ito yung principal, binawas sa principal, ito yung binayaran natin. Therefore, interest natin, expense is 51,000. So, equals ito. Ibig sabihin naman ngayon, divided by yan. Doon sa ating interest expense, ang dami nating pambayad. Kada isang piso, meron tayong 9 peso na pambayad. So, yan. So, yung ating interest expense ay kayang-kayang bayaran ng ating operating income. Debt service coverage ratio. Ito naman ay cash required to pay back the principal and interest of outstanding debt for a particular period. Okay. So, ano ito? Total debt service. Cash required to pay back the principal and interest of outstanding debt for a particular. So, magkano operating income natin? Ayan. Magkano yung total debt service? Sabihin, magkano na lang yung ating loan. Yan, nabayaran na kasi natin yung 300. Out of the sa 1 million, nakabayad tayo ng 300, so 600 na lang. Tingnan natin, equals operating income. Yan. So 71%. Yung ating operating income ay 71% ng ating total outstanding debt. So, ano ba yung total outstanding debt natin? Andito yung sa loan interest. So, magkaano na lang yung kulang natin? Ayan, at the end, ito, 686 na lang. Efficiency, gaano ba ka-efficient ang ating operations? So efficiency ratios, also known as activity financial ratios, are used to measure how well a company is utilizing its assets and resources. Asset turnover ratio measures a company's ability to generate sales from assets. So magkano ba yung net sales? So net sales is also our gross sales. Kasi hindi naman natin consider yung sales returns. Dalawa yan. Sales returns and sales refunds. Returns and refunds. So net sales. So, magkano ang ating sales? Yeah, 5 million. Magkano average total assets? Since 1 year pa lang in operation, it's the same. Magkano ang total assets? Ito. Diba? Total assets. 1.2. Divided by... O ano ibig sabihin nitong 2.66? So measures the ability to generate sales from assets. Yung ating binili ng mga makina, mga equipment, lahat ng ating total assets, naka-generate sila ng 2.66 or 266%. Ibig sabihin, kaya tayo nakabenta ng maraming produkto kasi marami tayong naibayad, marami tayong cash na pangbayad ng ating mga inventories. So 2.66 asset turnover. Ito ang participation ng ating assets sa ating net sales. What about our inventory turnover ratio? So magkano ba ang cost of goods sold? So cost of goods sold natin, diba? Ito yun, cost of goods sold. Average inventory, meron tayong divided by ilan? 12. Kasi we have 12 months. Equals this divided by this. Okay, 11. 11 times. Ano yung sabihin yan? A company's inventory is sold and replaced over a given period. So sa isang taon, 11 times nare-replenish ang ating inventory. Ibig sabihin, kapag meron tayong inventaryo, nabibenta agad. So, o-order na lang tayo ng bagong inventaryo, tapos mabibenta na naman agad. So, ang inventory turnover ratio ay 11. 11 times. Accounts receivable turnover ratio. Ito naman, measures how many times a company can turn receivables into cash over a given period. So, average accounts receivable, net credit sales. Ito lang yan. Magkano ba yung ating net credit sales? Magkano na lang yung pautang natin after a year? Yung AR natin. Yan. Yan na lang pautang natin. So, average accounts receivable, sabihin yan, ating receivable ay 1 month lang naman eh. So, isang taon pa lang, yan na lang din. Average. So 1:1. So kung meron tayong receivable na 416,667, nababayaran yan. Nakukolekta agad na. Days sales in inventory ratio measures the average number of days that the company holds onto inventory before selling it to customer. So 365 inventory turnover nasa taas. Divided by, yeah. Ano naman ibig sabihin nito? Ito related sa pareho itong may relasyon siya. Ito naman ibig sabihin, days sales in inventory ratio. Gaano katagal, ilang araw bago magkaroon tayo ng inventory turnover? Ilang araw bago ma-replenish natin ma-sold out ang ating inventory at magkaroon ng panibagong inventory. Kasi turnover. So 32.85 days. It will take 32 or 33 days para yung ating turnover ng inventory, para yung ating inventory ay ma-replenish, mag-turnover, maggamit at ma-replenish. Okay? So yan ang efficiency ratios. Let's move on to profitability ratios. Anong profitability ratio? It measures a company's ability to generate income ang pinag-uusapan, relative to revenue, balance sheet, assets, operating costs, and equity. So, gross margin ratio. Ano ba yung gross margin ratio natin? So, magkano ba gross profit natin? Gross profit ay ito. Magkakano ang net sales? Ito rin. Compares the gross profit amount to its net sales to show how much profit a company makes after paying its cost of goods sold. Ay, gross profit is equal to this, which is 484. So gross profit, mali. Gross profit, wala pa, ito lang, minus cost of sales. Yan. Ang net sales natin ay yung gross sales. Kasi sales minus sales returns, wala nang time returns. So net sales, 5 million. So, ang gross profit margin natin ay 50% or 0.5. Sabihin, doon sa ating sales na 5 million, ang ating profit dyan talaga, less natin yung cost of goods sold, ay 50%. Operating margin ratio compares the operating income of a company to its net sales to determine operating efficiency. Ito naman yung operating income, ibig sabihin, gross sales minus cost of sales equals gross profit minus operating expense net income. So, magkano yung net income natin? Equals, yan. Ito na yun. 484. Operating income. Ang net sales ay magkano yung gross sales. Ano ibig sabihin nito? Yung ating net income na operating income na 484,000, yan ay 10% ng ating net sales. May kumita tayo ng 5 million, ibig sabihin yung malinis na income ay 484,531. What about return on assets ratio? So parang katulad din yan, ito yung ratio ng efficiency ng ating assets. So magkano net income? Ang net income natin ay ito. Actually, ito ay net income before tax. If we want to consider tax, yun ang ating magiging net income. Total assets, magkano ang total assets? So magkano yan? Divided by 26%. So So yan ang return on assets ratio. Yung ating assets ay kumikita yan ng net income ng 26%. Return on equity, so ito naman net income na ito, tingnan natin based on equity. Magkano na ang equity? What's this? Divided by yun. So 0.49. Yung ating net income, 0.49 na equity. So paano nangyari yun? So, tingnan natin yung, di ba meron kong 500,000 na kapital, plus kumita ka ng 484. So ito ay, actually, yan yung 49% ng iyong equity. Okay?
Sir, wala akong sound.
Ay, sorry. Thank you. Ulitin natin. Okay. So, ipagpapatuloy natin yan. Yung first natin na first year of financial ratios, nakuha natin. Now, we move on to year 2. Pero to be able to proceed with year 2, kailangan natin i-complete yung AEQ table natin. Okay? So, unang-una, consider natin yung accounts receivable collections. So, nakolekta na natin yung accounts receivable. Ibig sabihin, itong AR na ito, nakuha na natin. So, naging cash na siya. Pero syempre, nabawasan na ang ating accounts receivable. Kaya at the end of the day, ayan yan. Wala na tayong accounts receivable. Still, balance pa rin. Susunod ay yung ating accounts payable payment. So, nagbayad na rin tayo ng ating accounts payable. So, magkakano ang ating binayad? Ano yung accounts payable natin? 208,000. So, syempre, the same amount ay mababawa sa ating liabilities. Yan. So, 208 minus 208 dahil nabayaran natin, wala na tayong accounts payable nung tumungtong yung first month. So again, revenue from sales, meron tayong revenue. Pero hindi lahat na kolekta natin. Sabihin natin ang ating sales ay 10% increase. Mag-increase tayo ng times 1.1. Therefore, ganun din ang ating cost of sales. Sabi dito, revenue is 1 month equivalent for accounts receivable. So magkano yung accounts receivable natin? Equals this amount divided by 12. Bakit divided by 12? Remember, we have 12 months. Yung 11 months, bayad. Yung ika 12 months, babayaran pa lang natin sa susunod na buwan. Or Yung ating 458,000, yan ang ating accounts receivable. Therefore, ating payment na lang ay dapat 5-5 lang. 5. Yun. So, 5-5 minus 458. Ang lumabas lang sa ating cash ay 5 million. Hindi pa na-generate. Yeah. So, 5041 plus accounts receivable, that is 55. So, yung 1 month, accounts receivable, itong 11 months, ang pumasok. So, gayon din naman, sa ating sales, ito ang cost of sales. So, ang cost of sales should be deducted from inventory. Ibig sabihin, kung ito ang inventory, the same lang siya. To be deducted. However, same period, nagkaroon tayo ng purchase ng inventory kasama yung base dun sa cost of goods. Yeah. So, nakabili tayo ng 2,750. Pero, 1 month equivalent for accounts payable equals this much divided by 12. Sabihin, ang nabawas lang sa atin ay tama ba? Correct. So, 2,520. Kasi yung 229, doon pa natin babayaran sa susunod na buwan, which is next year na yan. We're talking of December. Balansi pa ba? Let's check. 4,650. So far, tama ang ating analysis equation. For our salaries, so sige, meron naman tayo nitong kopya. But for the sake of discussion, sabihin natin, saan ba yan? Salaries times 1.1. Nag-increase siya ng 1.1. 10%. Pati rent, nag-increase ng 10%. Utilities, advertising, communications. So last year, wala tayong business permits. Pero ngayong taon nito, year 2, magbabayad na tayo. Gaano nga ba yun? So lahat ito ay cash accounts, meaning merong epekto sa ating cash. Yan. Yan natin. O, balansi pa rin, ha? Itong depreciation, machinery equipment, 5 years, 5 years, 2 years. Okay. So, magkakano nga ba ang depreciation ng machine? 32. Furniture, 10. So, yung ating machinery equipment na nabawasan uli ng depreciation. Ito na lang, 96,000 na ang book value, 30,000 na lang ang book value ng ating furniture. Ang ating technology, after 2 years, wala na. Kasi good for 2 years lang. Sorry. Expense siya. Expense, hindi non-cash. Okay? Since ito ay nabawas, hindi naman cash ang ating nabawas. So, na-depreciate siya. Pero i-consider natin ang kanyang depreciation expense. And let's move on to loan repayment. Kung magkano nga ba ito? Negative sum of, balik tayo rito. Ano ang ating ginastos? Second year. Ito ang premium natin, di ba? Ito yung payment due. Ito yung total na ginastos natin. So, magkakano yung principal na nabayaran? Balik ulit tayo. Magkano yung principal? Ito yun. So, second year. At magkano lang yung total na loan repayment? Interest expense. Yung interest, kunin natin yung total ng second year. Yun. Okay. Balansi pa rin tayo. Gusto niyo na mag-withdraw? Withdraw na tayo ng 500,000. Negative 500,000. Kung i-withdraw nyo, yung nabawas. So 1803, 1803. Okay. So we are now ready for our financial ratios. Second year. Okay. So the time, let's go back to the first. Liquidity ratio. Current assets. Current assets. Current assets. Ito, tsaka inventory. Ito ay machine and equipment, fixed asset, ito ay other assets. So ito lang, cash, AR, inventory. Magkano ang ating liabilities? Current liability, 229. This divided by this. 7.08. Again, ang paliwanag natin, for every current liability natin, meron tayong current asset na pangbayad. 7.08. 7 times pwede nating bayaran yung ating current liabilities. What about our current assets, acid tests? Current minus inventory equals current asset minus pagkaling inventory natin. 200. Same, current liability. Divided by. So, kung magsarado man na tayo, liquid, very liquid ang kumpanya. Kasi meron kaming current assets, huwag natin isamang inventory, current, tsaka AR, kaya namin bayaran ang current liabilities 6 times. So more than 100%, 600%. Ganun din naman sa cash. If we consider cash on its own, cash lang. Ilan ang ating current liabilities? This. Still, 4 times na pwede nating bayaran ang ating current liability. Operating cash flow. Ito ang ating operating cash flow. So, yung second year natin. Year 2. Ito ang ating cash flow, di ba? 964. Tsaka, ang current liabilities natin ay so, pareho lang. Pareho lang natin ng cash. So, 4.21. Let's move on to leverage financial ratios. Magkano total liabilities natin? Sum of accounts payable and loans payable. Magkano ang total assets? Total assets. Ito. Yan. Yung ating liabilities debt ratio ay just 32% of our total assets. So hindi yan malaki. Ang mahirap kapag mas mataas ang ating liabilities kaysa sa ating assets. So debt to equity ratio. Total liabilities, ito sa taas. Ang ating equity ay so magkano ang ating equity? So ito na. Kasi ito 7 plus 7, 984 plus 741 minus 500. Ito na ngayon. Ating updated capital or equity equals yan. Ngayon, kung ang magbabasihan na naman ng equity, meron tayong capital pa na 1.2 million. Ang atin lang bayarin ay 582. So it is just 48% of our equity. So magsarado man tayo ngayon, yung ating total liabilities, pwedeng, kumbaga, these liabilities are just 48% of our equity. Interest coverage, so operating income, interest expense. So operating income natin ay ito, interest expense, year 2 interest. So interest year 2, this one. Yun. Yan. Yung ating interest na bayarin ng 32,000 ay kayang-kaya yan ng ating operating income. So interest coverage ratio, cover ang ating interest ng ating operating income. Next, debt service coverage ratio. So kung ito ay interest expense, ito, total debt service, cash required to pay back the principal and interest of outstanding debt for a particular period. So operating income natin ay the same. Total debt service. Ito na lang ang balanse. Ito, ang balanse, 686 after year 1. Tapos 353 after year 2. 686, 353. 4 equals this divided by. So 2.1 ang ratio. 2.1 is to 1. Ibig sabihin, yung total na utang pa natin ay kayang bayaran because of our income. Twice as much. So yung ating income ay twice as much our total debt. Third financial ratio, efficiency. So net sales over average total assets. So magkano yung net sales natin? Net sales, ibig sabihin, ating gross sales yan. Kasi wala lang tayong sales returns, sales refunds. Average total assets. Ito ngayon, average ng alin? Total assets, ha? Yes. And last year. That is the average. Divided by. So 2.98, yan ang asset turnover ratio. So ito ay napoproduce na, nag-generate na sales from the use of our assets. Cost of goods sold. Year 2, cost of goods sold. Saka yung average inventory. Yan natin yung average inventory ng 2 taon. So ito yung first. Ito yung second. So, $13.75 ang inventory turnover ratio. So, how many times the company's inventory is sold and replaced over 1 year? 13.75 times. Net credit sales, tsaka average account receivable. Tingnan natin to. Magkano ba yung net credit sales natin ngayon? Net credit for taon ito. Accounts receivable, 453. So magkano bang average year 1 and year 2 no accounts receivable? Yan, at saka $1.05 ang accounts receivable turnover. So ito yung average natin, nakakolekta tayo more than 100%. Day sales in inventory, again, 365. Inventory turnover ratio. Okay. Gaano katagal bago mabenta ang ating inventory? 26.55 days. So, 26 days lang siya nasa ating inventaryo, mabibenta na natin siya. Now, moving on to profitability. Gross margin. Ano ba ang gross profit natin? Equals, gross profit ay ito. 5 less ng cost of sale, 2,750. Magkano ang sales natin? Ito, 5.5 million. Still, 50% ang ating gross margin ratio. For every peso na ating nabibenta, 50 centavos ang ating gross profit. What about operating margin ratio? Operating, it's net sales, so that means operating efficiency. Operating income, gross minus cost of sale minus operating expense. So, ibig sabihin, ito yan, year 2. Net sales, so 13%. Yung ating net sales, or yung ating net operating income minus net sales. So yung ating income, yung ating net sales, ito yan kasi, sorry, net income before tax as a percentage of net sales ay 13%. Return on assets and return on equity. Magkano ang net income? Total assets ay so 41%, 0.421. Ibig sabihin, net income over total assets. Yung ating income ay 41% ng ating assets. Return on asset. Ibig sabihin yung ating assets, cash, machine, lahat ng ating assets ay napag-convert natin, nakapag-generate siya ng profit at 41%. So if we have 100 assets, 41 pesos ang ating return on asset ratio. Net income, kano ating equity? Ito ang ating equity ng year 3 or start ng year 3, end of year 2. Okay, 60%. Yung ating net income ay 60% of our equity. Bakit? Kasi ito, di ba? Yan, 742. 500 lang yung ating tawag dito. Di ba? 500, naging 984. So, 741. 60%. Okay, and that will be for year 2. So you can continue year 3, year 4, or year 5. Okay. So that ends my lecture, presentation, and demonstration. So let me just turn off our recording. Thank you very much for joining, and keep safe, mga anak. God bless. In a while, I will be answering your questions.